I think Ethereum is way ahead in terms of how staking has been like working really well with DeFi. Whereas in our kind of parts of crypto, it's like native staking has been like really well adopted from the very beginning. Like Cosmos Hub has been, I think, the first chain where people got super excited about like staking because they could get yield just by staking their tokens to the delegators. It was kind of a cool new thing. And I think now it's kind of went full cycle. And like our realization when we were looking at the space was that native staking is kind of killing the ecosystem in a sense, just because like all the assets are locked, there's high inflation, and there's kind of very few reasons why they should be doing something else. Just because with this very high inflation, DeFi is kind of difficult to kickstart. So this is kind of the problem that we try to solve.
Hello, everyone, and welcome back to another episode of Mind with CoinFund. I am Jake Brukhman. I'm CoinFund's founder and CEO, and today I'm joined by my co-founder, managing partner, and chief investment officer, Felix. Alex, how's it going?
It's going well, Jake. We're already deep into 2025, and lots happening out in the crypto world. Speaking of that, kind of what's been on your mind lately? What kind of tech are you paying attention to, and what's changed since the turn of the new year?
Well, other than all the obvious regulatory environment changes, been seeing a renewed interest in decentralized data layer technology of all kinds and all types. But yeah, there's a lot of agents going around, or a lot of agent frameworks, and it turns out agents want a lot of data, and they want data in all kinds of different forms and different ways. And there's a bunch of people building products for that. So that's what I've been looking at recently. What about you?
Very cool. I've been focused a bit on DeFi lately. There's a lot buzzing in the space, seeing structured products, we're seeing vaults, we're seeing evolution of liquid stake tokens and ways that people can continue to put their assets to productive use as well as use them efficiently throughout the DeFi space. So I'm excited to have with us today a couple experts in that area. DeFi is another, part of crypto that has found some product market fit. We see a couple $100 billion of stable coins that live on top of various protocols, and we're seeing a lot of innovation in how people will continue to govern and benefit from other types of crypto assets. So today we're excited to speak with a few of the experts in the space. Please welcome Mitya, co-founder of Drop Protocol, a liquid staking protocol for the IBC ecosystem, and Nemo, the lead contributor at the Lido Alliance. Nemo, do you want to tell us a little bit about the Lido Alliance? And Mitya, please introduce yourself.
Sure. So hi, everyone. Nemo once again. So Lido Alliance is like a specialist vehicle that was voted by the LDO holders like a year ago, almost a year ago. And basically it's a specialist type of partnership vehicle for tight collaborations with the different protocols that are interesting protocols around Lido DAO ecosystem or generally around the ecosystem. So yeah, that's kind of like a TLDR.
And I'm Mitya. I'm a co-founder of Drop Protocol. Drop is a liquid staking protocol for the IBC ecosystem. As Alex said, we're the inaugural member of Lido Alliance. Pretty proud of that, to be honest. So happy to work with Nemo and other Alliance and Lido contributors closely on that. We're live since August 2024. And now live with 2 different assets, and looking forward to introduce a couple of others in the coming months. So yeah, happy to be here, and thanks for having me.
Awesome.
The Lido Alliance is one of the largest yielding ecosystems in the space. They've really focused on helping people stake ETH and do many other things. But what are some things that people are missing in this kind of next phase of Lido, and sort of what does the Lido Alliance bring to the table? Curious about why everyone should be focused on it and why we're not hearing as much about it as I thought we might.
Sure. So it's pretty interesting. Like if you look at the LSD ecosystem and Lido DAO, it's like a really wide set of like a different DeFi, not just DeFi, but like a different types of products that you can see that are emerging around the DeFi. And from that perspective, when it comes to Lido Alliance, the interest is really broad from that perspective. So we have like some of the members that are in DeFi, like Vaults, as you mentioned, from Mellow. We have Drop, that is kind of like a younger brother of Lido. And then we have like a pre-confirmation such as Bolt. The things that we are looking into are like really broad from a perspective, as Jake mentioned, like some of the AI type of products that are possibly like really interesting for the DeFi ecosystem and maybe broader from that. Different data availability products. Again, as Jake said, like it's really hot topic more and more coming back. And then like anything in between, really, like from the card systems, from different yield-bearing products, from delta neutral strategies, from other kind of like new evolvements from the DeFi perspective, like on top of lending, like lending aggregations and multi-chain lending type of things, different bridging protocols. So like really you can look at anything that is bringing decentralization to the Ethereum, growth and strengthening the stake DET ecosystem, or generally like bringing something like a safety or new areas for yields when it comes to the node operators and others that are involved in the Lido DAO ecosystem.
Maybe if we take kind of like a broad high level view, could you guys talk a little bit about like, I guess staking and just why is staking important in general? And I also feel like so far staking has been a very like crypto native thing for, deep crypto users. And my question would be like, do you see that changing over time? Is this going to be a new asset class for a broader audience as maybe like DeFi goes more mainstream?
Yeah, I can start. I think it's kind of different answer if you look at the different ecosystems. And because we work in the IBC part of crypto, we looked a lot at like how it's different from Ethereum, for instance, and there's a lot of difference. I think Ethereum is way ahead in terms of how staking has been like working really well with DeFi, whereas in our kind of parts of crypto, it's actually like native staking has been like really well adopted from the very beginning. Like Cosmos Hub has been, I think, the first chain where people got super excited about like staking because they could get yield just by staking their tokens to the delegators. Is what it was kind of a cool new thing, and I think now it's kind of went full cycle. And like our realization when we were looking at the space was that native staking is kind of killing the ecosystem in a sense, just because like all the assets are locked, there's high inflation, and there's kind of very few reasons why they should be doing something else. Just because with this very high inflation, DeFi is kind of difficult to kickstart. So this is kind of the problem that we try to solve, and I think we're succeeding to a large extent in that. So yeah, I think it's very different in the different ecosystems, but I think they also start to kind of converge on how this should work. It's interesting to see this kind of wave of proposal across Solana and then Celestia and then Cosmos Hub. I think is coming there as well in terms of reducing inflation to something closer to the Ethereum level. So I think Ethereum kind of got the balance right from the beginning in terms of how high the inflation should be and how the like staking APRs should work together with DeFi and such. And this is why I think like Ethereum is so far ahead, as well as because DeFi summer kind of happened before staking started. So I think that helped a lot as well. But I agree with you that the whole staking thing is kind of for people deeper in the trenches. I think for like let's say new wave of users that onboard, they could be like they shouldn't think about staking. That's my point of view. They should rather think of okay, like the assets that they use have some basic level of yield that is largely coming from staking. They shouldn't be worrying too much of like should I stake, choice of node operators and such. That I think that should kind of sit on a couple of levels down from the end user. What the end user should care about is that by default the assets are getting them some yield, and to a large extent that's going to be coming from staking. And I think this is where Lido is doing a tremendous job at creating this kind of infrastructure layers on top of STs. And I think Lido v3 is actually a pretty cool way to structure it so that there's a way to build multiple products that are kind of closer to the end user that have staking and like liquid staking somewhere underneath, but don't kind of project this to the user directly. So I think this is where it's coming. So I think like, let's say if there is a new bank that has like a few different assets, that's probably just going to be like, you have ETH, you have, let's say, Atom or TIA, or you have BTC, they're all yield bearing by default. There's some underlying mechanisms how the yield is, but the users wouldn't really think that much.
I one more kind of quasi philosophical question here, but like sometimes when people from traditional finance, when they look at things like I don't know, like the Ethereum staking rewards rate, they kind of make this analogy. Hey, this looks like kind of a risk-free rate for crypto. It's sort of like a benchmark by which you can judge, other yield. It's sort of like a very like fundamental yield. Well, my question to you guys is like, there's many blockchains and many blockchains have different yields and they have different like sources of yield as well. What does yield mean? Like should people like understand like what am I getting exposure to if I'm putting money into something that yields this rate?
Nemo, you want to start?
Sure, I can start. I think that like, again, we get to the point of like different products and different assets will have different sources of yield. Some of them are balanced yields, and some of them are kind of like naturally yields that how the iterations were happening in the blockchain space and how iterations were happening on all of these different layers. They got their balance, and some of the yields that we usually have in these crazes we call DeFi summers or like a bull market is kind of like showing you the yields that are like also connected with the speculation part of the token that is underlying from that. So from that perspective, I think that the different assets will do this. In the Ethereum ecosystem, you have the inflation that is like already inside of the protocol. So from that perspective, your exposure is just to that inflation, right? In case of the stake ETH. But then like how we are going further and further and how we are developing this ecosystem will have all kinds of flavors. Some of them will be sustainable. Some of them will be less sustainable. And I just think that like, I know that for people, sometimes due to how fast is the pace in the blockchain space, for people, they're not thinking that, in my opinion, the whole DeFi space is still in the infant phase. Like I know that we are looking at this for like 4 or 5 years right now, but there is like so many different flavors and new instruments and new interesting protocols and innovations that are happening that I think that we'll have like these kind of like constant iterations in the next like 10, 15 years where we'll have different types of yields. So from that perspective, like I think that at the end, it will be dependable on who is offerer of that product. So when it comes to the, Jake, as you mentioned, traditional finance, I do believe that like in collaboration with the different companies, institutions, and so on and so forth, it will be also on the balance between the DeFi space and already established protocols to collaborate with these institutions and kind of like offer explanation in some simple terms, what is the exposure towards the customers and users. But yeah, like when it comes to stake ETH, it's mostly like on the side of like inflationary of the Ethereum space. They have like new flavors, the new yield opportunities all around us. I think that it will be also on us to figure out and show to the users like what are you exposed to and how risky that is. It's always debatable what risk means. As you guys know, like with the smart contracts, you never know. It is for hundreds of years there on the chain. Still, like there is maybe an attack vector. We still didn't solve it with insurance perfectly. I think that insurance constantly comes back as a concept to talk in the blockchain space, but we still didn't find like, in my opinion, the full product market fits. We have a couple of like interesting products there, but yeah, it will be interesting to look like where we will go beyond this. So yeah, that's my opinion.
It is interesting that we've built a lot in DeFi, but there's still some things missing. I think the abstraction of yields has become easier for users to understand, whether it's sort of underlying and truly productive or kind of speculative with a new asset being handed out in exchange for your actions. But I'm still trying to kind of map out this journey here and really understand what's still missing. One thing that maybe you guys have some insight on is, where do people go to find these opportunities? What's the universal guide to finding the ways in which you can produce the yields? It seems to me that unless I know the exact operator and the exact website to go to, many of these opportunities are very hard to find, and they're still not as easily, sort of consolidated up at the wallet level for users to take advantage of. So, where do you think we are in this journey? A lot of the infrastructure has gotten quite sophisticated, but as you know, the safe adoption, the accessibility, sort of where you can find yield opportunities and how you can safely, interact with it and understand the risks all feel like in some way, shape, or form, still absent, but maybe starting to percolate and make progress.
Yeah, I think that's a very on point observation. We've been dealing with this kind of concept of, let's say, discoverability of the opportunities that generate yield recently. And I think like, okay, we have our own bias because we're dealing in the ecosystems in the ecosystem that hasn't been very that hasn't had the very active DeFi space within it before. And what we realize is that just in terms of the users' habits, well, they're all kind of trained to stake natively. They're not really kind of trained by the ecosystem to discover these new yield opportunities, and that's really kind of a challenge to make the opportunity obvious. It's kind of interesting that maybe there are more kind of users that have experience in DeFi, but there's kind of different issue of just saturation of different opportunities that exist. It's just difficult to follow. There are all these different points programs going on. It's interesting to see how different, like there's all these interesting opportunities, and they have unpredictable yield, which is kind of where really yield splitting tools like Pendle thrive. Once you have this unpredictable yield, you that's the best type of asset for Pendle. So I think Pendle has been a really good tool for it, and that serves as kind of price discovery for the future points value as well, pretty well. So now you can go to Pendle, like filter out all the BTC LRTs, and you can see how much people value all these future points of BTC LRTs. I think that's just amazing. Like how basically crypto can tokenize this kind of future value. That's amazing to see. I think another tool that is so there's basically more and more vaults that people build. And for instance, one very interesting thing that Gauntlet is doing with the Jupiter GLP pool hedging strategy is super cool. So that's basically kind of democratizing, let's say, access to the yield from this pool, because they're kind of providing a way to make the yield more predictable. So I think there are now these different emerging approaches to how you make some sense of this chaos that is going on. And I think all these tools are actually pretty cool. And in my view, there is also kind of the next step of just kind of packaging somewhat unpredictable yield into also just a tokenized asset on chain that then is very easy to use. You can swap it, you can use it as collateral, and so on. Ethena basically, they kind of took a strategy that is like many people use a strategy, but it kind of shows just the value of tokenizing a relatively sophisticated strategy, let's say, and making it easy to use and predictable. I think that's another great way. And maybe that's kind of the ultimate way, like how you can capture the yield, package it. Like the most crypto native way to package the yield is issue an asset that represents it and makes it easy to use. And then I think kind of ultimately that's just kind of where it's going. And the more yield opportunities that you have, the more value is in kind of simplifying access to them. And I think all these ways, like yield splitting, vaults, tokenization, I think all these are very valuable on this path, because it's just impossible even to track what's going on, to be honest.
It's really, if I may add, like on all of this, like it's really interesting if you look at historically, right? Like a long time ago in crypto, it's a long time ago, like a couple of years ago, when the whole DeFi summer kicked in, like one of the things was for everybody, like, oh no, I need to chase yield constantly. Like as you, Alex, said, like the big question is like always like where to go in order to find the opportunities. And I think that that's like kind of like a complex question in a sense that yes, blockchain did democratize the access to all kinds of like a financial, let's call it a future instruments, but like financial protocols where you can find the different yields and different sources how you can earn money. But in the same time, it really depends like how deep you are in the whole concept, right? Like we can't expect that 99.9% of this planet will spend enormous amount of hours in Telegram chats, in Discords, on Twitter, trying to find the yields, and then how they can even actually like how they can even analyze like what of these protocols are, how risky they are, and what are the opportunities there. At the beginning we had Yearn, right? Like Yearn started, and shout out to Yearn also like for productizing their evolves into something that other people can actually use across the ecosystem. And after that, like we got into this interesting point, as Mitya mentioned, we have like stablecoin products like Resolve that, for example, is doing the alternative strategy. Athena and Resolve are like kind of like the biggest contenders right now, where Athena is like a really the first one that started with the breakthrough, and then Resolve continued on that path. We have then the whole restaking thing that like still we are like trying to assess like how this goes. It's like a really powerful opportunity for people to kind of like instead of like shipping their own consensus mechanisms, they can use the other consensus mechanism through the restaking. And now honestly, like with Symbiotic finally shipping like with the restaking and the slashing, sorry, like with shipping with the slashing and everything around that, and products like Mellow that started doing vaults on top of that, like you start getting all of these building blocks. The challenge is that we need multiple more years. And from that perspective, like there is like one side that I think that whoever is offering to the retail users the opportunity to earn yields should be wary to offer like a different types, like either a safe yield that is like low yield, but it's comfortable for everybody to use, maybe something medium that like people can still understand. But I think that like if you're talking about these, the highest opportunities that everybody are talking or chasing inside of the crypto space, you need really to be deep into the whole system, right? Because what you either need to be a Solidity developer or Viper developer in the Ethereum ecosystem if you're trying to find the best yield resources and try to understand that, which not that many people can understand the attack vectors inside of these codes, or you need to have a friends that you trust and ask them to help you out. But then again, it's a social risk thing from that perspective, or you're betting on protocols that are established for a longer time in our ecosystem that you kind of like feel, hey, this wasn't exploited or hacked for like a really long time, and they're investing millions upon millions on different audit and bug bounties. So therefore, I trust these type of smart contracts that I can deploy my assets there and earn interest-bearing assets. So from that perspective, I think like when it comes to the retail, it will be on the side that we will have like a retail-facing products that possibly will have with a flavor of some kind of like insurance that either that particular company or institution or whatever is like offering to their users by cutting a certain portion from the yields, or it will be like an educational space where you will need to explain to people like what are the risks depending on how quote unquote crazy you want to go when it comes to these yields.
Yeah. Well, thanks, Nemo. So maybe some historical context could be interesting here, right? You mentioned the DeFi summer of 2020. I feel like the historical context is that around that time, there was a lot of demand for token issuance. Like founders wanted to create new tokens, they wanted to get them listed on exchanges and get liquidity. But at the same time, there was sort of this lack of regulatory clarity, especially in the US and in other countries of the world. And for crypto exchanges, it was like very, very difficult and risky to list tokens, to do it quickly, and to really meet that demand. And so I think what people kind of in their ingenuity figured out is that you could do something called liquidity mining, which meant that if you got people to deposit the token of a project into a decentralized exchange with an automated market maker, then you could turn the revenue stream from that market making into a yield, and that would incentivize further people to create more and more liquidity. And so a lot of projects got liquidity that way. So question for you is, so in that context, you know, we probably have seen an explosion of different kinds of yields since then. Are these yields still mostly coming from something like a liquidity mining or reward scheme for a project? Like, what are the opportunity? Like you mentioned, you know, yields of different risk types, right? You know, how do you get a lower risk yield versus like a high risk yield?
Got it. I think like, so if you're like, I don't know, from my perspective, like if we are trying to kind of like put the levels of like the different yields and different risk there is like you have a native yield. So let's say like let's say that stake ETH is basically a native yield. It's the inflationary from the Ethereum staking ecosystem is like the first level, like it's a native yield there. Then the next level, if you're talking, is exactly what you Jake said, like a liquidity provision on something like Uniswap, where you take these tokens. Usually it's a mix between ETH as an asset and that token, or a stable coin and that particular token. And you're kind of like doing liquidity provision in order to earn some yields that will be A, from the trading fees, or B, like mix of trading fees and possibly like the token of that particular project. Not in the case of the Uniswap, but there's like a couple of other decentralized exchanges that also have this tokenized kind of like cherry on the top, let's call it like that, when it comes to the yields. And then we have like a new source, like not new sources. These sources existed. It's just that people did not build the railways. And that's where it comes, as we mentioned, like Resolve and Athena, where you have like these delta neutral strategies that are mixing off-chain and on-chain components, where you are basically like doing all kinds of these hedgings, where you're like quote unquote shorting and longing in the same time, and you're earning from the yields that are going from these either centralized exchanges, decentralized exchanges, bunch of like different kinds of like sources that are in that level. And then we have like a new types of yields that will possibly, how the time is passing by, be kind of like more predictable yields. Like as I mentioned like a couple of minutes ago, like when Symbiotic launched with slashing, we basically got to that point that it is helping potentially with a stable, predictable yields for many entity holders, and it can be including for stake ETH, for example. But there's like a lot of new yield sources that are like either protocol owned liquidities that we have that is happening right now in the ecosystem. We will have like a vault type of products that we mentioned already here that will be the exposures to different strategies. And when you see different strategies, it's either you're borrowing your assets for the securities of the restaking networks. It will be like lending on a certain lending protocols, and you're earning from that. So it's not just like liquidity provision on the centralized exchanges, but also lending protocols such as Aves, Morphos, so on and so forth. And I think that now we are having this new layer that is like popping up potentially also there, which will be the aggregation of lending, because we now have like multiple different lending Eulers, Morphos, Aves, so on and so forth. And then you will want to balance and optimize between these in order to earn more yields. So from that perspective, I think that that's why, like when we're talking about this, like it started from the DEXs, as you mentioned, Jake, like in the DeFi summer of 2020. It started with liquidity provisions. It started with these liquidity minings, but then how we are evolving as an ecosystem and how we are having more and more kind of like tighter collaboration between the protocols and collaboration between smart contracts. So let's say we get to this point that you're having a new yield sources with less and more risks, how the things are like evolving.
Very interesting. Do you guys see kind of more AI participating in that process of optimization of how to deploy capital? Like what do you see in the market? Are people using agents to optimize yield?
I think it makes a lot of sense, and yet I kind of yet have to see this deployed at scale. Like to be, maybe I was kind of unlucky to not have met these agents. That would be actually like managing strategy at scale. But it seems that everything which is kind of meaningful in scale so far was more or less like automated by humans, let's say, rather than humans operated. But I'm wondering what Nemo has to say. Maybe his different experience.
Yeah, I spent endless hours last 3 months talking with the different AI projects, trying to assess them, talking with a bunch of friends that are working in the top USA companies in the AI space, just trying to assess like from all of the sides, like both, because how Lomashuk from Lido told me once, like it's really hard to find like the both amazing crypto contributors and AI contributors like together on one project. It's still like it's happening slowly, like it's kind of like a start of the whole kind of like AI crypto type of thing, but like we are still far from that. What I mean by that is I don't be it's not that I don't believe, like, so this is the thing. I am not feeling still comfortable to deploy a huge amount like around me or talking with the other investors and other participants in the market. Not that many people is comfortable to put a huge amount of money to agent in order to kind of like go and do the optimizations and chasing things for me. What I do believe that we will see is as we constantly see, like our industry is still not the mid level, meaning like that people would be comfortable to put maybe $100 to the agent that is chasing a low market cap thing. Why? Because well, still our industry is like looking at these speculative things and like trying to find like an easy way around like from 100 to 1 million in 3 clicks. I do believe what will happen is that how the time is passing by, I think that there will be like an interesting experiments in like, I can in some foreseeable future see AI agents that are your market makers that are deployed in the trusted execution environment where you actually let them do the market making for you and you know the algos or you know basically like what was deployed and that nobody played with that particular model after you deploy the assets or after you started engaging with that agent. I can see things like that. I do believe that we'll have like a bunch of other experiments. I think that the challenge still stays the same, which is connecting the real world and the blockchain world. I think that like even though it's really epic that like I remember the base guys like did a couple of like a month ago, like an agent that is ordering pizza for them and like taking USDCs and just like wrapping up all of these things. That's amazing. And these type of products like definitely should exist. I just think that due to the nature of our space right now, that's not the most DeFi agents that will make your like do the strategies. But then like even I was talking with the guys from the DeFi Saver, one of these automated protocols or part of the automations on top of like all kinds of landings and being there for you so you can like actually sleep well at night. And they already have recipes. So like philosophically, like if you even give the assets for the landing optimization, you could debate that basically agent is just like organizing these recipes that already exist. Remove from Aave, put it on Morpho, remove from Morpho, back to Aave, from Aave to Euler, like doesn't matter. Like basically it's just constantly moving assets for you in order to organize the best yields. So I think that it will be really interesting. I think that we're in the infant phase. I encourage you people to play and innovate as much as possible, and I hope that they will do that as much as possible. But I do think that we will have like a long period before you're giving like 1 million to an AI agent to optimize your yields and go and sleep well at night.
Gotcha. Okay.
Well, we have
Thanks
AI
for the-
coming in from one side, and we have potentially RWAs coming in from the other. Does the rise of RWAs sort of threaten the existing status quo? Do you think it makes, sit side by side very nicely with more crypto native opportunities, and is the same infrastructure used, or how do you guys see that as a potential tailwind or threat?
I think curiously enough, I haven't touched the RWA space a lot, and yet I'm actually super excited about it because I think like the whole tokenization aspect of crypto works really well, theoretically, with RWAs. I don't honestly know why. Like it seems the adoption level is like relatively low for now, and it's probably coming, especially with hopefully, let's say, less danger coming from the regulation side in the next years. Yeah, but I think like tokenizing everything and putting kind of the money Legos together is the ultimate kind of value prop of crypto in a sense. Maybe not the only one, but it's a very important aspect. So yeah, that should work well with RWAs. I think there's kind of like crypto has to be kind of big enough also to bring a lot of value kind of compared to what you can do with these assets outside of crypto right now. So maybe we're now at this point when it's actually meaningful.
So I love always to tell my friends when they go bananas on just debates about like what's working in crypto, what's not, is like, I'm like, chill, mate. We are still 50 times less than even S&P 500. And I really want to kind of like tell to people that again, that this industry, doesn't matter how long it looks for all of us that are participating here constantly, it's really like a long way ahead that we need to kind of like solve. So from that perspective, I think that it would be irresponsible for me to say that I know what would happen and how the infrastructure would change when we start having RWAs here. I am really excited for as many as possible tests that are happening. If you look at that, like we managed to find some kind of like interesting tests that grew really well and grew like a really huge in the DeFi space, but we are still trying and battling around the gaming system, social ecosystem, music ecosystem, art ecosystem, RWA ecosystem, so on and so forth, for all kinds of reasons. Some of these reasons are legal reasons. Like, as we know, like there's like a bunch of people that I totally understand that got scared from like all of the things that were happening in the last couple of years from this perspective. And they were not sure, should they go further with anything that is touching maybe privacy or stable coins and so on and so forth. And I think that like, hopefully now with like a lot of changes that is going on, especially in the States, I do think that people will kind of like get more into the zone of testing. And I think that we have like a lot of years ahead of us. I don't believe that like RWAs will threaten the infrastructure right now, Alex. I do believe that this infrastructure will be really amazing to use with RWAs, because like if you can, I don't know, tokenize the building and then lend it on a lending protocol, then borrow some money there, then put the yields in some vault, and then use the yields from that vault in order to repay building of the new building. Like, are we actually like helping out in some way to kickstart broader democratized access to the fundings in order to continue, I don't know, developing this planet in any kinds of ways?
Awesome. What do you guys think? Like, any predictions for the future? Adoption, maybe like integration into traditional finance.
ETFs. I do believe that we will start seeing yield-bearing ETFs. I don't know
Okay.
when.
For
but
like
I
the
do
major
believe-
assets, like Ethereum, Solana.
Yeah,
Okay.
easily, in my opinion, see that. I can't tell you like will that be for all these assets this year or next year. I think that there's like a lot of question marks still. At least when I'm talking to hundreds of billions of dollars in the traditional space, they still want to see how this goes, right? Like, remember, we had like a volatility. We had the bull markets and bear markets in our industry, right? So that's still scary for somebody that is managing money from pension funds, from 401ks, and so on and so forth, like all kinds of other people's money in the traditional world. So from that perspective, like, I don't know about the timeline. I am definitely certain in the next like 2 years we will see more and more of these. I am curious which countries will adopt first or where we will see that. Like, I assume something like States, Switzerland, Singapore, maybe some other places like Japan, so on and so forth. But I think that this is like interesting thing. Like, right, you have like auto compounding asset. In our case, like it's a staked asset that is like auto compounding for you, and you're exposed through the ETF with them. And I think that like how the time is passing by and how there is more regulatory clearance and understanding around the crypto space, and how we are more educating each other, both traditional space educating us and crypto space educated traditional. I do believe that we will see like more and more of these kind of like prolifications of sorry, I lost my like thought train thought. Like, where was I? Yeah, I lost it completely.
Yeah, I can add another one. Like, what I'm really looking for is just more experimentation with the tokenomics design. I think that's kind of the big one that was really blocked by regulation, or let's say behavior of certain entities. And I think there's a lot of value that can be generated there, because like for DeFi protocols, if you can do more with how your token operates, maybe beyond just issuing a governance token, or maybe like doing buybacks, I think there's going to be a huge unlock. And like, I don't think that there's been a lot of very interesting kind of tokenomic designs so that these tokens get interesting utility and can really kind of get value to the token holders that is generated by the protocol. But now it seems that we can experiment with this a bit more. So I don't think it's going to happen overnight. I mean, regulation doesn't change that quickly, but my sense is that many people are starting to see this as a bit of unlock and start experimenting there. So I'm pretty excited about this part.
It's a good point, Mitya. At the end of the day, and Nemo, I'd love to hear your thoughts too, but tokens are programmable digital assets, and they really can do anything. And yet people are still stuck in their, sort of media biased views that they do nothing and they don't
Mm.
represent anything. So there is a lot of white space, and I do hope to see some experimentation there.
Yeah,
I
and
also Go ahead,
just
Mitya.
gonna say that it's kind of weird that, like, to some extent, this kind of situation when tokens doing nothing were kind of the less risky tokens. I think that also kind of pushed the whole ecosystem in this meme coin craze, because like meme coins were the less risky ones all of a sudden, which doesn't make any sense. But so yeah, that's kind of interesting to hear, to see how it's gonna evolve now that probably meme coins are less attractive because kind of people know what to expect from them, which is not much in my view. And yeah, all new designs can emerge. Sorry, Nemo, you were saying.
No, also wanted to add, like, because we kind of like spent a lot of time on the DeFi side here. Like, I do think that like a lot of innovation is not even kind of like opened up to the broader audience. Like in some of the places, $5 that creator gets because somebody vibed it and liked his image or audio or whatever they produced goes a lot. And there's like a lot of places on the planet where these $5 to $10 from this kind of like a tip goes a lot. And from that perspective, I think that we are still ripe to see the innovation when it comes to outside of the DeFi space, outside of the financial instruments. I do believe that there is like a really powerful thing that the blockchain can bring to this world. And I think that we still need to grind and figure out these, or crack the codes, how you would say, for all kinds of like different products that are maybe not in DeFi. Because in DeFi, you could say philosophically it was easy. Like you would have a token, and token is, if you have the token from that DAO, you stake that token potentially gives you a certain surplus from the treasuries that, or the fees that the protocol is getting. So it was kind of like quote unquote easy to kind of like map how the token economy around a certain protocol and product should work. But when you go beyond the DeFi space, there is a lot of things that you need to figure out. Like when it comes to anything that I mentioned, like a gaming or social, sure, if all of these protocols are having a fees, then you can also like do it in the same way. But to get to the point that these protocols are earning fees, it's much harder kind of like a puzzle to crack comparing to, hey, just apply different assets on this protocol, you're earning something on top and everybody happy. So I'm pretty much excited to see as many as possible different types of products that can help people, educate people, make them smile, make them happy, make them vibe while they're like driving the car and listening somebody's music, and then tip these people. Recommendations if you're visiting some place and you're happy to pay for somebody that is curating a list. Like all of these things like already existed, quote unquote, aware how amazing and magical the future will look like.
Thank you. Where can we learn more about Lido Alliance and Drop Protocol?
Yeah, regarding Drop, you can find us on the website, drop.money, and our Twitter handle is drop.money as well, where dot is spelled DOT. So yeah, feel free to check out.
On my side, always you can check like the voting and quarterly reports that Lido Alliance is doing on a Lido research forum. So highly encourage people to read there, read proposals from a couple of members, how the whole process look like, so on and so forth. Lido Alliance board, lidoallianceb.org website. And also like you can follow me, Captain Nemo on Twitter. I talk a lot about Lido Alliance, and I talk a lot about Lido Alliance members and future Lido Alliance members that I'll hopefully surprise everybody in the next couple of months.
Excellent. Thank you so much for joining us, Mitya and Nemo. I really appreciate having you on the show. That was Drop Protocol co-founder Mitya and Lido Alliance lead contributor Nemo. For those who tuned in, thank you so much for listening. If you feel passionately that we got it right or wrong today, let's keep the conversation going. Leave us a review and let us know what you thought. If you'd like to follow me on Twitter, my handle is FlexThought, and Jake's handle is @jbrook, spelled JBRUKH. Make sure you download where you get your podcasts, and we'll be back soon to dig deep on some of the new ideas that are worth fighting for in the crypto space. Thank you.